The Federal Reserve is releasing its regional Beige book, the Economic Survey, 2 weeks ahead of the FOMC meeting. The survey reads in part, quote, reports from the 12 Federal Reserve districts indicate that economic activity continued to stabilize in July and August. The report continues, again quoting, wage pressures remained minimal across all districts. Consumer prices were described as being steady in most districts, although Kansas City and San Francisco noted some downward pressure on retail prices, end quote. You are watching Bloomberg News. I'm Mark Crumpton in New York. Thanks so much for joining us. Our economics editor Kathleen Hayes has instant analysis to the Fed's Beige Book report. Kathleen, what are you hearing?
What I have a lot more details. Can't hear anything ahead of that 2 o'clock embargo, Mark, but I do have a lot more information on what the Beige Book said. In fact, most of the Fed's 12 districts are reporting that their businesses in their region were cautiously optimistic, even though the majority of districts saw flat retail sales, even as cash for clunkers boosted them. Most saw improvement in the residential real estate markets, but prices still falling. Commercial real estate, weak across the board. Loan demand weak in many districts as well, even though most said manufacturing improved. Let's take a look at a couple of key regions to get put a little more flesh on the bones of this report. We're going to start by going out to San Francisco, which is the biggest region out west. In San Francisco, of course, we're going to try to answer this question of consumer. What about sales? In San Francisco, many said sales were boosted by the back-to-school season. Shoppers still focused on essentials, not buying those big-ticket items. Restaurant sales weak, and of course, not surprising, given that the Beige Book said that there's not many wage pressures. We're not boosting our paychecks. Let's move on to Dallas, because I want to take a look at a couple of areas that have to do with housing in this report. Dallas said local home prices were starting to firm, and you can contrast this to nearly all other districts which reported that prices were still falling. Dallas and others, though, said first-time homebuyer tax credit helping demand strongest at the low end of the market. Let's move on to Philadelphia. Philadelphia, of course, a key industrial area. We want to look at manufacturing. Now, across the board, the Beige Book said that the regions reported improvement in manufacturing. Philadelphia is one that saw slight to moderate increases in new orders, like Cleveland and Chicago. All regions said loan demand was weak, credit still tight. Philadelphia saw further weakening in loan demand across many categories. A little note I'd like to finish with on Boston. Manufacturers who cut wages in that region do not expect to restore pay levels till next year, Mark. This is one of the things really weighing on the region and, of course, weighing on the economy. One reason why we're not seeing more consumer spending, because wages have been cut. You've lost your job. This is an area being watched very closely to see if we're really going to get a recovery. Our economics editor, Kathleen Hayes. Kathleen, thank you so much. And we have a couple of guests who are going to be joining us right now to discuss what's been going on with this Beige Book today. And Kathleen, just giving you some of the snippets. Robert Heller, the former governor of the Federal Reserve, joining us. And also Stephen Cochrane, director of regional economics at Moody's Economy.com, an economic analysis and forecasting firm. Gentlemen, thank you for joining us. Welcome to Bloomberg News. And Mr. Heller, let's begin with you. What can you glean from some of the headlines we've been hearing about the Beige Book today?
Well, I think it confirms that we have turned the corner now. I think the trough was really about May, early June, and now we are slowly on our road to the recovery, with some sectors starting to pull ahead a little bit. You mentioned the Cash for Clunkers program being helpful. So that helped us at least temporarily. Commodity sector is doing well, and housing seems to have bottomed out.
Mr. Cochrane, your views?
Well, you know, I was looking for 3 specific comments, one on housing, one on manufacturing, and one on commercial and industrial loan demand. The housing sounds pretty good, and I expected that, actually. I think things are beginning to stabilize, at least in terms of sales, if not prices. The comments on manufacturing from Philadelphia sound pretty good, at least a little bit of an uptick. It sounds like manufacturers are viewing the fact that inventories are getting low and maybe there's a need to rebuild a little bit. The comment on lending didn't sound so good, and I wasn't clear whether that was retail lending or commercial industrial C&I lending, but a rise in C&I lending is really a key factor, since consumer spending isn't really going to bring this economy back on its feet. It's going to be more investment spending, and I'm looking for that. You know, Bob, I want to ask you about that, because you say that you feel that generally you feel the economy has turned the corner. You think the Beige Book reflects that. You know, they said the economy stabilized. They said their business contacts were cautiously optimistic. But number one,
We see loan demand weak. That doesn't sound so good. And there are people like Steve who say the consumer's not going to lead the recovery. I don't know how you get a recovery if it's not led by the consumer, which remains about 2/3 of the U.S. economy.
Well, first of all, the consumer credit is still contracting very much. People are trying to consolidate their own balance sheets, get on a firmer footing. So credit card debt, consumer debt in general is declining. On the commercial credit side, I mean, I don't know whether it's weak demand or unwillingness of banks to lend. Banks are not very aggressive in their lending, to say the least. So I think both of that plays a role here.
Oh, Steve, watching the regions of the country, putting what we just told you about the Beige book, you both are going to have a chance to study it in just a minute, come back in the show and give us some more analysis. But what you have seen, how do these things stack up? Where do you see the rays of hope? What part of the country is still very, very soggy?
Well, you know, the really soggy places are either the parts where the housing market is still very weak or where manufacturing has really been remarkably weak. And so it is the industrial Midwest, it is a good part of California, Nevada, Arizona, and it's Florida. And that's why housing and manufacturing are two things that I'm looking at very closely to see if there's much of a turnaround, at least in the view of the Beige book. The note from San Francisco actually, you know, sounded pretty good in terms of housing and also in terms of a little bit of optimism on retail sales. And I tell you, it's when the consumer economy begins to pick up, it's when the housing market will be stabilized. That's what I think when most households will feel a little more comfortable to spend that, and if the unemployment rate finally begins to level off.
Gentlemen, can we talk about that jobless number? Where's that factoring in going forward? Because it's inching up near that 10% mark. What is that going to mean, Mr. Heller?
Clearly, it means that, first of all, there will be no wage pressures, but it will also mean a lot of uncertainty in the consumer sectors. People just will not spend money if they think their job is in danger. And furthermore, the young people just can't get any jobs. And let's not forget, we had an increase in the minimum wage in July, and that is partly responsible, in my view, for the almost astronomical unemployment rate among young people. Above 25% in most areas. 25%.
Yeah. And Steve Cochrane, a lot of people are saying, you know, there are folks who have given up looking for jobs, and there are those who are part-timers who want full-timers. So that national unemployment rate in real terms could be near 16.5%.
It could be higher if you look at those who are discouraged or just working part-time when they'd really rather be working a full-time. It could already be in the low teens. And we see in some areas around the country where the labor force is beginning to fall. The measure of this is a little bit uncertain, but it does reflect some discouragement.
Well, Bob, quickly, you've seen a lot of recessions and you've seen them turn into recovery. How does this stack up to what we've seen in the past? Is it really that much worse, or are we also pessimistic because we haven't been through a recession in a long time? Quickly.
No, I think it's about average. I think that's what we've seen. Monetary stimulus is the one factor that is really pushing us forward right now.
Right. Robert Heller, Stephen Cochrane joining us with analysis of the Beige book. And gentlemen, thanks. We'll rejoin you in just a couple of minutes. We're going to take a break, give our guest a few minutes to look over this very lengthy report. And we are back with Robert Heller, former governor of the Federal Reserve, and Stephen Cochrane. He's director of regional economics at moodyseconomy.com. We're talking about today's Fed Beige book, and we've given our guest a little bit more time to check out what was said and perhaps what wasn't said. Mr. Heller, anything else that you've read that surprises you that perhaps was omitted from today's Beige book?
Well, what was omitted, for instance, is the biomedical sector, which has been and will continue to be one of the strong, leading, vibrant sectors of the U.S. economy. I guess they just don't have a representative of that sector on the regional boards, and these are mainly reports from the regional directors. So biomed, I would say, continues to be strong, continues to be a leader, along with IT, and that was not in the Beige book.
Mr. Cochrane, anything that you saw that perhaps was omitted?
Well, I wish there had been more comments about the lending environment, the commercial and industrial lending. There was some comment about continued weakness in demand and still some tightening in lending standards. The comments were very brief. I take it as a negative that there was no good news to report there, sort of a continuation of the July report and what we've seen in previous months.
You know, Bob, as I went through it, I do think that the San Francisco region noted some pickup in output of technology-related items, and I can't remember if it was Minneapolis, one of the regions in the Midwest saw some demand increase for healthcare services. But I want to get back to this point of, if we see so much, we see stabilization, but if we want to get into recovery and into expansion, Bob Heller, what is going to lead us there? Biomed doesn't seem like quite enough.
Well, I think right now we still have a lot of monetary stimulus in the pipeline. Monetary stimulus is the one that brought us out of here, out of the recession, out of the downturn, and it will continue to fuel the upside. To a very minor extent, the federal stimulus program. We saw a bit cash for clunkers during the last month and a half, but in the future I think there will be a minus because a lot of car sales were pulled forward in that regard.
But don't we need the consumer? Steve Cochrane said it's going to be investment-led. How can you get a recovery with just business investment?
Well, clearly we do need the consumer, but we also need investment. And, you know, I mean, that's where my wish would have been. A tax cut that would stimulate investment. That is really the missing ingredient here. And typically we have done that when there was an economic downturn. We had research credits and things of that sort that we don't have this time. So there's very little to stimulate investment.
Steve Cochrane, where's that investment that Kathleen and Bob Heller talked about? Where's that coming from?
It's hard to find. I think as we see export demand begin to pick up a little bit, and as, again, demand for IT and technical products, I think we'll see some investment. It's interesting that when you look at past patterns of business investment spending, they were very strong in the 1990s, double-digit growth almost every year, notwithstanding the dot-com boom. But very moderate in this decade. It was single-digit growth most years during this decade. And there is a broad demand to renew and refresh the capital base of the country in computers and electronics and even basic industrial equipment. But it will take some, more confidence among the business sector to actually take that step to move. I think, one thing about this report is that its tone seems to have begun to shift a little bit. Just the very first paragraph of it talks about, cautiously being positive, and all 12 districts reported stabilization in the economy. It's the first time I've seen that sort of a shift in tone. And for the Beige Book, that's important because there aren't any numbers in this report. It's all anecdotes, it's all commentary, and the tone can mean a lot. Okay,
speaking of tone, let's spin this forward. In a couple of weeks, I'll probably be here helping Mark with the Fed, the FOMC show. We want to drum up a lot of excitement for it. But Bob Heller, can there be much excitement? Can the Fed tell us or do anything? What do we get from the Beige Book to spin us ahead to the meeting? What are you expecting there?
Well, the Federal Reserve already has its foot right down to the ground on the gas pedal. So the Fed is doing everything the Fed can do in order to stimulate the economy.
Right.
They can't go any further. They will be talking instead mostly about how will we eliminate the stimulus. Come the turn of the year, we really have to start to watch out that we do not reignite inflationary pressures. Commodity prices are going up right now.
Mr. Heller and Mr. Cochrane, we have less than a minute left. I want to ask both of you, possibility of a double-dip recession, do you see that on your radar?
Absolutely, absolutely. W, that's the name of the future.
Mr. Cochrane?
Well, there's certainly a risk there. If we think that we are out of the recession now or close to it, the next 6 months will be very, very soft, and that would be the greatest risk going forward, I think.
Robert Heller, former Fed governor, and Stephen Cochrane of Moody'sEconomy.com joining us to discuss today's Fed Beige Book. And as always, my thanks to our economics editor, Kathleen Hayes. Kathleen, thank you so much.